The dollar's share of global reserves just hit a 30-year low as central banks around the world pile into other currencies and, above all, gold. Is the world walking away from the dollar as global reserve currency? Will we be buying our toasters with gold coins? The data comes from the IMF's quarterly COFR report, which measures central bank reserves. Now, central banks hold these reserves to manipulate their exchange rates, typically to weaken them to promote exports, but not weaken it so fast that they crash their banks. Reserves are also a safety net. They're liquid assets if central banks get into trouble, which many do, from Egypt to Ethiopia to, until very recently, Argentina. Now, traditionally, these have overwhelmingly been U.S. dollar assets, so federal debt, corporate bonds, stocks. This because these are big markets and the dollar is the most liquid asset in the world. Put it together and you pay very low commissions to buy and sell dollar assets. As a bonus, the Fed was traditionally thought to be more prudent than most of the world's central bankers, so say Egyptian central bankers could sleep easy with dollars. And yet the IMF report found the dollar's share of central bank reserves has fallen to 57.5%, the lowest since 1994. Now, before COVID, the U.S. had been slowly losing share for decades, bleeding out as central banks diversified into other assets like the euro, the yen, or itty-bitty currencies, typically trading partners or next-door neighbors. And, of course, gold, in an interesting central banker vote of no confidence in paper money as a whole. This slow erosion took dollar assets from 85% of reserves in 1977 to 71% in the year 2000, and then down to 62% in 2019. And then came COVID, which positively opened the floodgates. The dollar dumped 6 points in just 5 years. For perspective, that would put the U.S. dollar on track to below 50% of reserves in another 6 years. So why did it collapse? 2 reasons. Loss of confidence in the Fed, as in COVID showed the Fed is no better than anybody else at handling inflation. And second, sanctions. Specifically the seizure of Russia's central bank dollars, which put central banks around the world on notice that their dollars are not as good as gold. In fact, they're only as good as Joe Biden's handlers' willingness to not seize them. So what's next? Brought to you by Unchained.com. Interestingly, one alternative to the dollar that is not gaining share is the Chinese yuan. In fact, its share is down almost a third since 2022, when the Chinese economy went stagnant, even as the rest of the world recovered from COVID. Meaning, so far at least, it will not be China that dethrones the dollar. It will be the mediocrity of the Fed's handling of inflation with a growing assist from gold as insurance that even central bankers think is worth buying against a falling dollar. As for the long game, the fastest way to put the dollar back on its throne is end the government deficits, reduce spending in Washington. A balanced budget tells the world the U.S. will pay its debts and won't inflate its way out of trouble. That, of course, is going to depend on Congress doing the right thing, an adventurous assumption in the best of times, and it adds one more big stake riding on Doge's spending cuts. Okay, we'll be watching. See you next time.